It's time now for business. Let's say hello to Kate Moody.
Hi, Francois.
I guess belt tightening will have to wait for the French.
Absolutely. This 2021 budget that was outlined today certainly has very, very few, if any, austerity measures outlined in it. The €100 billion recovery plan, which was outlined earlier this month, is at the heart of next year's spending plan. It's based on a forecast of a 10% contraction in 2020. That will be France's worst recession since the Second World War, followed by a possible 8% bounce in GDP growth next year. Finance Minister Bruno Le Maire confirmed some €42 billion would be dispersed in 2021. The measures include a cut in production tax, training for young people about to enter the workforce, aid for factories to reduce carbon emissions, and the extension of the state-sponsored furlough scheme. Despite the mounting public debt, Le Maire vowed to continue supporting industries in need, saying that money spent to protect jobs and businesses was a good investment.
Since the beginning of the crisis, we've been doing everything we can to help the employees and the entrepreneurs, and we'll continue to do our very best. We will be by your side, and we will keep providing measures that will allow you to overcome these extraordinarily difficult times, this with the smallest possible impact on your activity.
Uber has won the right to continue operating in London. The ride-hailing firm was contesting the Transport Authority's refusal to renew its operating license over safety concerns involving fake drivers. Catherine Viette reports.
A victory for Uber after a UK judge ruled the ride-sharing app can have its London operating license reinstated. In his ruling, the judge said, despite their historical failings, I find them now to be a fit and proper person to hold a London private hire vehicle operator's license. Citing a pattern of failures, the city's transport regulators had previously refused to grant Uber a new license in 2019. Transport for London said Uber's platform had allowed for unauthorized drivers to pick up passengers, among other concerns. Uber says it's fixed security issues with its app and apologized for mistakes that were made. Monday's ruling marks the latest stage in a long-running battle between the taxi app and Transport for London. TfL first suspended Uber's license back in September 2017 over safety concerns. Uber appealed, and the decision was overturned by the court in June of 2018. Uber has faced a backlash and regulatory problems in other countries, including the US, Australia, the Netherlands, and Germany, and has been forced to withdraw from some cities. But London is the company's largest market in Europe, with about 3.5 million customers. Losing access would have been a big blow. Not everyone has been pleased by the decision, though. The London Taxi Drivers Association calling the ruling a disaster for London.
Let's check in on the day's trading action now. Shares of Uber rose as much as 5% in New York after that UK ruling came down. We're seeing Wall Street rebounding from its 4-week losing streak. The Dow Jones up nearly 2% this hour. The Nasdaq up about 1%. The major European indices closed sharply higher. The DAX closing up over 3% there in Frankfurt. The CAC 40 nearly 2.5% here in Paris. The banking sector led gains in Europe. Shares of HSBC jumped 9% after a Chinese investor increased its stake in Europe's biggest lender. Meanwhile, the pound sterling rose against both the dollar and the euro, trading at about $1.28 there and €1.10. This as another round of Brexit talks kicked off in Brussels. The UK has refused to withdraw a controversial bill that could change the foundation of its withdrawal agreement from the EU. Both sides have said that significant gaps still remain. Trade negotiators will be meeting on Tuesday as they try to reach agreement by the end of this year. Key sticking points include fishing rights, support for businesses, and cross-channel regulations for the financial industry. American consumers are still allowed to download TikTok, at least for now, after a last-minute reprieve from a federal judge. The Trump administration had ordered that new downloads be banned from midnight, despite a pending deal to address national security concerns. TikTok lawyers successfully argued that it was a punitive measure motivated by politics, and a judge gave that ruling just a few hours before before the actual deadline there. China's foreign ministry, meanwhile, has accused Washington of abusing its national power and bullying behavior. The terms of last weekend's tentative agreement would appear to divide control of U.S. operations of that video app between Oracle and TikTok's parent company, ByteDance. If that deal doesn't go through or it's blocked by either Chinese or American authorities, Donald Trump has said he could issue a ban to ban the use of that app altogether. That could take place in November. The goalposts seem to keep shifting when it comes to TikTok, but for now it is still up and running and beloved by some 100 million users in the United States.
100 million. Wow. We'll have more business news for you later.